Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, January 23rd, 5:10 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see in the trend gauge over here, we've got the coveted 4 arrows, which means market leadership acting terrific. And all 5 of the major indexes are trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So what happened today? Mix closed on the indexes, but big tech leads the way, and that resulted in new all-time closing highs for the S&P 500 and the NASDAQ-100. Here are the numbers. Big 7, not a huge number, up an average of 0.61%, but all 7 components were up. And if you expand it to the FANG Plus index, which includes AMD, Netflix, and Snow, all 10 of those components were up. So that's really what led the way today. Our G8 is our 8 growth ETF composite, down 0.1%. S&P 500 broke out late in the day, traded in a very tight range all day after opening up 0.1% after 3 o'clock. Made new highs, up 0.33%. Equal weight up just 0.05. Typical when you see the big 7 leading, that the equal weighted is down less than the S&P index. NASDAQ-100 up 0.42, equal weight up 0.38. Dow was negative, hit by some negative earnings reaction to a couple of components. Mid caps and small caps get disappointing here, gapped up 1%, but faded throughout the day and actually closed off the lows, but still down about 0.4% each. Global 60/40 just barely positive. Global stocks up, the bond index down as bond prices faded while yields rose a slight bit. In-house GROTECTION just barely positive, up 0.03%. Some constructive pullbacks in our leading stocks and a new name added today. We'll talk about that when we get to the charts. And let's get to those charts. Well, we'll start off with the Russell here. You can see the gap up, closing the bottom third of the range. Here's the intraday action. There's the gap up, didn't last long, started fading. This fade coincided with interest rates and the dollar getting stronger. Those are small cap stocks very much dependent on those winds blowing in their favor and not against them. Let's flip now to the S&P 500, which is where we normally start, but you can see here a higher high. Didn't get above yesterday's high, so yesterday's still holding the record for an all-time intraday, but another high close. And just good stuff here after a move off the 21-day moving average, 4 straight up sessions, and going sideways a little bit, waiting for some reactions to earnings. That's really earnings growth. If it's expanding, then the multiple can expand, the market can go higher. If earnings are coming down, the market's not going to go higher. I'm talking about the broad earnings in the S&P 500 in this case, but it really trickles over to any index. Honestly, earnings growth is the driver for stocks. NASDAQ 100 up 0.4%, new closing high. Dow Jones Industrial Average pulled back below the 38,000 level, but no big deal. Closed at the top of the range. And we looked at small caps. Let's look at mid caps. Outside negative reversal. Again, disappointing. Gapped up, closing the lower part of the range, down 0.42%. And let's go to the VIX. VIX working in our favor now, back below the 21-day moving average, down 4.85%. What's next? The dollar, 0 USDR. And as this got stronger during the day, this getting stronger corresponded with a little bit of weakness in stocks, but then it pulled back later in the day. And we had that breakout after 3 o'clock when it was near or approaching lows of the day anyway. Gold and gold stocks. Well, gold up 0.5%. Kind of consolidating here. You can see a downtrend line here, at least, that you can look for a possible wedge pop out of that, which would be bullish. But gold stocks still look terrible, even though they're up 2.3% today. Bitcoin continues to look terrible. Now, the reason I keep showing the BITO chart, somebody asked a great question on YouTube. I'm going to answer it. We're showing it because this gives you a better picture about what Bitcoin has been doing. Yes, if we end up getting back into Bitcoin, it will probably be with IBIT, but this doesn't give any context except to obviously show you how all of these ETFs and Bitcoin itself is lower since the ETF started trading on January 11th. But we'll keep showing the BITO chart to give context of where it's been and where it is in relation to where it's been. But and we definitely won't be buying GBTC. That was another one of the questions. This is the original one, but their expense ratio is completely out of whack with the rest of them, and they will lose assets because of that. That's one thing I'm pretty confident about. You can't have a 1.50 expense ratio when there's other ones out there that are 0.2 or free for 6 months. So sorry, Grayscale, it's a market. And here's the bond index down, which means yield slightly higher, down 0.2%. The TLT, that's the long bond, down 0.8 TYX. We have to pay attention to this. We don't want these longer rates breaking higher. As they were strong in the day, it held stocks back. We don't want to see this continuing to break higher. We are above the 21-day moving average on these yields, but enough already if we want stocks to go better, especially growth stocks, especially smaller growth stocks. We don't want yields higher. Here's TNX, the 10-year into the declining 50-day moving average. That is our inter-asset correlation. Let's get to the tail of the tape now. Netflix and Tesla kick off big tech earnings. Netflix after hours today, Tesla after hours tomorrow. Netflix up about 7% on its earnings report, despite the fact that they missed, but they had a massive subscriber growth. They also lowered their subscriber and revenue forecast, but raised their earnings. So they're getting money from that that lower tier, and also kicking people off of people that have been riding the gravy train off of other people's accounts. They're getting more money because of that, making people sign up on their own, and good for them, honestly. Okay, so we'll look at those charts in a minute. Up, day 4 up, 4th day above the 80 MA on the S&P, 12th day above the 21-day moving average. Sectors, uranium really the only thing that stood out to me today as having like a really big move outside of the indexes. On the downside, Bitcoin and the Bitcoin complex, ITB, this is important, KRE, IGV, and XLRE. DHI, one of the bigger home builders, reported and got smacked, and we'll show the ITB when we get to the charts. In-house, we added to our uranium position, URNM, and we bought Snow. We'll take a look at those charts too. Bottom line, index is mixed on the day, but led by big tech. The NASDAQ-100 and S&P make new closing highs. Let's get to some charts now. We'll start off with Netflix. Reporting earnings up 8.4% after hours now. So this is a breakout above that 500 level. If you look at a weekly chart, still not all-time highs, but you got to go back to late 2021 to where we were trading last time. This is before they had their huge drop in subscribers as people cut the cord after COVID. But look at how the stock has come back from 180 all the way back up to 500. And kudos for them. On the downside on earnings, here's DHI down 9.24%. Looks like it's breaking the chart, but if you go to the weekly, it's really just a normal pullback considering where it's run from 100 to 160 over the last 2 months or so. Did close below the 10-week moving average, and this impacted ITB, the broad home builders index down over 3%, still above the 50-day and the 10-week, but breaking below the 21-day moving average. And a failed breakout here above 103 in Monday's action. So not good there. Got to keep an eye on subsequent earnings reports and how the reaction to them comes in. Uh, let's see, what else did we? Okay, snow. We bought snow. SNOW. So heavy, above average volume and above average relative strength all day today. Got above this 202 level. So breaking some resistance there, pulled back. We did two buys on it. Both of them are profitable. We wanted to get it right at no worse than the top of this um, pivot plus 5% level, although it has pulled back to the shakeout, the IBD shakeout level, 8% below, 7 to 8% below the pivot twice. Really has had a strong last 3 days, breaking back above that 202 level. Let's see if we can continue to hold that. They are profitable, growing earnings, becoming profitable this year, and then another 40% in 2025. Actually, that's really January is their fiscal year, so 2024 January. This is what just is ending when they report their next earnings report, and then the rest of 2024 counts as 2025 earnings. And so those are. That is, blah, that's what we added today. Okay, also added to uranium, URNM. Shook out below the 8, strong all day today, back above the 8-day moving average. Weakest thing in the portfolio today, Datadog. This is a half-size position, just got really ahead of itself. Don't like that the volume was above average today, and it was kind of weak all day, even when the market was rallying near the end of the day. As long as it's above this purple line, the 8-day exponential moving average, will let that percent position ride. Affirm, still just that initial 1% buy that we did on it. Glad we didn't add yesterday. Not holding the 21 or the 8-day exponential moving average. Our 10-week is a stop on this, which is where it bounced off of, and that's what initiated us to do that first buy. Outperforming, leaders outperforming today besides snow. SMCI continues to trudge higher. Powerful stuff there. ELF with a resurgence, man. And these two stocks, man, they just shook me out, went without me, making a fool out of me. Happens all the time. Still, our stats are still solid, but it sucks when these are part of it, and you know that they could be a lot better. Expedia had been lagging lately, was up today, reclaiming the 21-day moving average. Dell, this is also server components, along with SMCI. You see it had that big day along with SMCI 2 days ago. Also good stuff. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is called GROTECTION because it's not about how much you make in the market. It's about how much you can keep. We're in growth mode right now. The market starts to fail. We'll pull back a little bit. If we start breaking below the key moving averages, we'll go into protection mode. And with that, I'll wrap up the video for Tuesday, January 23rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.